Property flipping returns as aggressive buyers chase quick gains. In this video, I'm going to go over how the FOMO is reaching its peak in the property market and people are now going into very risky financial strategies of trying to flip property in the Australian property market for a quick profit, even though there's so much risk in doing this. So sit back, relax, and let's get straight into it. So purchasing properties for a quick resale is on the rise as owners attempt to cash in on rising property prices. Low supply and strong demand from buyers making the most of cheap money and generous government concessions. So that's exactly right. We do have very low supply for quality properties here in the property market at the moment, and that's creating a huge amounts of FOMO, and people are just paying whatever price they can. They're paying above reserve in these high quality areas, not all areas, but in high quality areas, and mainly for houses on big blocks that have some scarcity factor or something unique about the property, or in a good school district, or in the regional markets or coastal areas. And not to mention, they're FOMOing in with all the government schemes that are in, where stamp duty has been reduced, there's been the home builder grants, and it's been ultra low interest rates. But those considering flipping a property within 12 months or 2 years need to allow for expensive resale costs, potentially higher inflation rates, and additional taxes, including capital gains and GST that can erode profits. And that's exactly right. Property investing should be viewed as a long-term thing, at least 5 to 10 years, not just 12 months. And I don't know why many people, unless you're an expert property developer, or you found some really undervalued property, undervalued by maybe 20% or more, I don't know why you would do this strategy. There is so much costs, and we're going to get into that right now. Serial flippers claim strong gains outweigh the potential traps, particularly during rising markets, for a property that is well located and carefully renovated with a tightly controlled budget. And you know what they say? Everyone's a genius in a bull market, and it's not until the market goes down that Warren Buffett says we see who's been swimming naked once the tide goes out. Market specialists claim a successful flip requires either finding a property that is selling cheap, say 20 to 40% below market value, or a runaway bull market where prices are rising rapidly. And hey, if you could get both, even better. But I don't think it's going to be easy to find a property 20 to 40% below market value in this market right now. Profits are made when you buy, not when you sell, says Michelle Hutchinson, who is renovating a third house in 15 years and plans to do it twice more before achieving her goal of a mortgage-free forever home. So this sounds like someone that's got experience that has done this before. Definitely wouldn't recommend it for first-time buyers or people that aren't experts at renovation, because it is so risky. Hutchinson Chief Operating Officer, online comparison site Finder, says she aims to seek financial independence outside of a 9-to-5 employment. And hey, I think that's something that's great. It's good she's having a crack. I think that's something everyone should do. You don't want to rely on one source of income. You want to diversify your income, find multiple streams where you have a side hustle. Maybe you have some dividends in some stocks. Maybe you have some cash flow in real estate. You don't want to rely on your 9-to-5, because as we see, wage growth is going nowhere. So you have to really take things into your own hands and take your financial future into your own hands and invest for the long term, but not doing risky things like trying to flip a property in 12 to 24 months. Joe Yates, who renovated and sold 9 houses in 10 years, including 6 in Western Sydney and eastern suburbs of Sydney, warns it's not easy and not a way to get rich quick. And that's exactly right. It's definitely not easy. It's very risky. You're not just going to flip a property every year and get $200,000 profit. You probably, if she's done 10, I'm sure she's probably had some projects that haven't gone as expected. Tim Lawless, head of research at CoreLogic, which monitors property markets, says high transaction costs such as stamp duty, conveyancing, renovating, and pest and inspections erode profits. And that's something I definitely factor in. Here in Victoria, you have to pay around 5.5% in stamp duty. You have to pay about 2% in selling costs for the real estate. Then you have to pay advertising costs. You may have to pay some costs to fix up the property, spruce it up, make it look a bit nicer. You have to pay conveyancing fees, all these tiling fees. If you're using a buyer's agent or you used a buyer's agent to buy a property, that's another around 2%. So in between the buying and selling, you could be paying all the way up to 10% in fees. And then when you take out those profits and go to buy another property, that's another 5% in stamp duty. It's also a risk of interest rate changes. Markets can also pose risk with potential for conditions to unexpectedly change because of changes in interest rates, the regulatory environment, or economic conditions, Mr. Lawler says. And I just did a video on how the bond yields are rising and how there is risk that maybe central banks printed too much money too quickly and inflation may rise quicker than they expected. And who knows, in the future they may have to lift interest rates. Karen Firth, a real estate agent for Burke's in Perth, where prices are among the nation's fastest rising, says a combination of state and federal taxes took the shine out of flipping. And hey, it's good to see that Perth is finally starting to pick up. It's been in decline for the past 6 years. It fell almost 20%, but it is one of the strongest performing markets now, as there's a lot of interstate migration. And in Perth, if the mining industry is doing good, the property market industry normally follows. Owners typically hold a property for about 8 years, according to analysis of recent government data based on last year's third quarter, with only 2% of properties sold within 12 months and about 6% within 2 years, and about 13% of those sold within 2 years incurred a loss. That's actually pretty surprising. I didn't realize the number was that high. For 13% of properties sold within 2 years incurred a loss, and again, that's probably due to the high fees. Definitely, guys, you don't want to just get into property to try to get rich quick. It's a long-term thing. Like I said, at least 5 to 10 years. You don't know what's going to happen in the short term. Anecdotal commentary from agents and brokers is that the volume of properties with short turnaround times is sharply rising. Selling costs of a typical $1 million house will include about 2% or $20,000 of real estate agent fees, 1% or $10,000 for advertising costs, a further $1,000 for conveyancing, property preparation of around $10,000, and a $1,000 for furniture storage or replacement. And that's why I say property flipping is so risky. Look at these huge amounts of fees you have to pay. This is why the property industry is such a big industry, such a big cash cow in Australia, because there's so much fees in it, so much stamp duty revenue in it. And imagine if you had to pay this much amount of fees to buy stocks. You know, no one would pay this amount of fees to buy stocks. But hey, we pay it for real estate because that's our obsession here in Australia. So that's $42,000 before federal taxes and thousands of dollars in stamp duty, with rates varying between states and territories. Those renovating multiple properties may also have to register for goods and services tax of 10%. If the Australian Tax Office regards you as a property investor, the chances that profits arising from the sale of your property will be subject to capital gains tax instead of just renovating your primary place of residence. This is a strategy I know some people do. They buy a primary place of residence while they live in it. They're actually pretty hardcore. They actually renovate it while they're living in it to make a profit, so they don't have to pay those capital gains tax, which definitely makes a huge difference in your profits of about 25%. The good news is that if you make a capital gains tax and have owned the property for more than 12 months, you can take advantage of the capital gains tax discount, which reduces your capital gains by 50%. So if you do hold a property for more than 12 months, like it says here, you'll get a 50% discount. If you're trying to do a flip in under 12 months, there's really no point because you're going to have to pay 50% of your profits in tax, and plus all those other fees. It's just not going to be worth it. So those who buy property with intention of renovating and then quickly selling would be considered to be in a profit-making scheme, and any profits or losses need to be reported in your tax returns. You'll get a tax deduction for all the costs incurred, but you won't be able to take advantage of the 50% capital gains tax discount. GST rules apply where the intention is to flip the house according to the tax office. Flippers warn renovating and selling can be stressful, specifically choosing the right property, dealing with local councils for planning approval, and choosing competent and reliable builders. And that's right, even just building a house is stressful enough. I can't imagine flipping it where you're trying to make profit in a short amount of time frame. I think this is something definitely only the experts should be doing. And I think unfortunately a lot of mum and dads are going to get caught up in these quick gains, these quick flips. Maybe there'll be some property spookers that will come out and give their formula where, you know, you can pretty much just go in there and flip property and make 100K. But definitely there's going to be some things that come up to bite them. Do as much as you can yourself and only do what you can afford, says Hutchinson. Don't try and double guess what is fashionable. Keep it simple and safe. Future owners can add their own pots of color. And that's something I definitely agree with. You just want to keep it simple. You just want to keep it generic. You may think something's really awesome or fashionable, but it may put off other potential buyers because you want your property to gather the biggest pool of potential buyers it can, and that's what will create a bidding war. Yates, director of Bricks and More, a buyer's agency, adds, avoid spending too much on renovation, particularly kitchen and bathrooms. A lot of investors overcapitalize and never recoup their money. So guys, what do you think about property flipping? Have any of you flipped property for a good profit? And what do you think about mum and dads jumping in on the bandwagon, FOMOing in and trying to get rich flipping properties? I think maybe instead of property flipping, where instead of, trying to flip a property within 12 months, maybe finding an investment property, minimum you'd probably want to hold it for 5 years, where you could do some easy cosmetic renovations. You may see some good gains. But again, what I think personally a better strategy would be trying to find the ugliest property on the best street where all it needs is some cosmetic renovations, something cheap, not something structural, because that's where the big costs incur, and finding something that's neutral cash flow or positive cash flow. Like in the regions a couple of years ago, people said, hey, if you get positive cash flow, you're not going to get any capital gains. But look what's happened in the regional markets. There's been positive cash flow and there's been incredible capital gains. And if you also found an ugly property, an undervalued property, and if you could do some easy, quick cosmetic renovations, you definitely would be laughing right now. My own personal strategy, if I was investing property, which I'm not at the moment, would be finding neutral or positive cash flow properties and investing for the long term, not trying to speculate on what's going to happen over the next 12 to 24 months, because there could be another black swan event like this pandemic. For all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, tap that like and subscribe button. I'll keep you all up to date on the latest property market and economic news here in Australia. And of course, I'll see you all in the next video.